Well, good morning, everyone, and thank you for joining at this Barwon Disability Accommodation Forum today. My name is Tom Patrick, and I'm a director at Barwon, as well as head of Barwon's healthcare property business. We've had a great turnout today with a terrific mix of existing and new clients from both the institutional and wealth management family office environments. And so we hope the forum today offers you some interesting and helpful insights into this exciting and we think worthy sector of the real estate market. As most of you will be aware, Barwon's been investing into healthcare property for over 8 years now, and we've delivered standout results for our investors during that time. We feel we've established Barwon as one of the country's leading managers in the sector, with a team now of 45 and in excess of $1.5 billion of assets under management in healthcare property. We've been researching and getting to understand the disability accommodation sector for some time, as we felt that it exhibited many of the characteristics that we liked about healthcare property. We have long duration leases, government-backed funding structure, strong demand-supply tailwinds, and importantly, I think, a strong social mission. So having spent some time doing this and determining that we felt there was an opportunity for our clients, we launched the Barwon Disability Accommodation Fund mid last year, and have managed to get off to a great start, building out a portfolio of circa $50 million of high quality properties, importantly leased to high quality, well-known market counterparts. So we're conscious that most of our clients are, I think, aware of specialist disability accommodation and the sector in general, probably some more so than others. But we felt now would be a good time to use this webinar to share our learnings, share our experiences, and I think importantly hear from a panel of real seasoned experts in the sector to try and offer a bit of perhaps a deeper dive into the industry, highlighting where we can, key risks, opportunities, and some of the characteristics that we feel make the sector quite exciting. So we do hope today's session can be as interactive as possible. Please feel free to fire through any questions you may have on the chat there. We'll do our best to keep to time today, and so without further ado, I'd like to introduce you to our panelists and hand over to my colleague Joss Engebretsen, who's the portfolio manager of the Barwon Disability Accommodation Fund. Joss will take you through some of our thoughts and our observations of the sector, and then lead a panel discussion with our panelists today. So in addition to Joss, we're joined by Helen Woods, who's the non-executive director of the SDA Alliance, which is really the peak body for the SDA sector. And Helen is the director of operations at Access Accommodation. Laila Burnet is the national director of health, aged care and retirement at M3 Property, a specialist advisory and valuation business. As well, we're joined by James Brennan, who's a partner at EY in the real estate advisory services division there. So over to you, Joss.
Great. Thank you very much for the intro, Tom, and welcome everyone on the call today. We've had fantastic interest in today's call, and it's really exciting to be here today to talk to you about this nascent but emerging asset class of real estate in Australia. My name is Joss Engebretsen, and I am the portfolio manager here for Barwon's Disability Accommodation Fund. Barwon's been looking at this sector for a couple of years now, and we're starting to build out a really great, robust portfolio in the space. And I thought it'd be great today to just run through a little bit of SDA 101 for some of those who might not be so familiar with the space, to give everyone a bit of context, and then we'll jump into Q&A with our panelists. So I'll just share my presentation. Great. So SDA, well, firstly, let's start off with talking a little bit around the NDIS. So the SDA is a funding package within the National Disability Insurance Scheme. So the history of the National Disability Insurance Scheme, which is the purpose of which is to provide a funding for supports of those with severe and permanent disabilities so that they can exhibit choice and control of how their care is delivered. It was initially started around conversations in 2009, ending up with a Productivity Commission report in 2011, which looked at the old way that disability sector was funded and found it was quite inefficient and just not a good form of funding, and it prevented a lot of people from getting the support they needed. So over the preceding couple of years, the NDIS scheme was designed and the Act came in 2013. After a trial period, the NDIS was deemed to be a successful program. It was rolled out across Australia from 2015. And here we are in 2022, and there's over 500,000 Australians, known as participants within the NDIS, who are supported by the scheme. And that's at an annual budget at the moment of $35 billion a year. Within that 500,000 cohort, there's around about 17,000 people today that are SDA funded participants, and that total income or payments for rents is around about 231 million a year. Looking forward, into 2030, the estimates at the moment are that 850,000 people will be supported by the scheme, and there'll be 28,000 SDA funded participants living in SDA approved dwellings at a total rental payments of around 700 million a year for the industry. So kind of what is specialist disability accommodation like? What does it kind of look and feel like? Well, at the end of the day, it's a residential accommodation. It's a residential accommodation funding package that's provided to eligible participants to pay the rent for dwellings that meet very strict design requirements and are enrolled and accredited under the NDIS. So it can't just be any typical home. The homes are specifically designed and optimally located to enable greater independence and community integration. So previously, there wasn't a specific asset class for disability housing. You would find a lot of people with disabilities in larger group homes or institutional environments. And there was even 6,000 people aged under 65 who are in aged care accommodation, a kind of accommodation that was a stage of last resort because there was no other opportunities for them to have kind of care in the home. Looking forward to where we are now, the scheme was brought in about 2016. So after the kind of first 4 to 5 years of the scheme running, we've got a really thriving but still growing SDA sector. And so these houses, as I mentioned before, are specifically designed. They have assistive technology in the home. They have fixtures and fittings which can be adaptable and accessible by people with wheelchairs and a range of different disabilities. And so overall, these homes are giving people much greater independence and autonomy over their lives, which is a fantastic thing to see. So what kind of participants, noting that it's only about 17,000 out of the 500,000 that are supported by the NDIS, what kind of participants are in SDA? Well, if we think at the moment, there's around 16,972 SDA funded participants, and around 66% of those come from 3 primary disability groups, being intellectual disability, cerebral palsy, and autism. When someone wants to actually get SDA funding on their plan, they firstly identify that they would like to have a housing solution, a housing goal on their plan, and they go out and they start to explore options. They have an occupational therapist undertake functional assessments, and a support coordinator compiles and submits the report and the request to the National Disability Insurance Agency, which controls and manages the scheme. Once that's approved, they're given an approval for a level of funding, which is based on their category of need, the number of people they're determined to be sharing with, and the location of that accommodation. When that participant is funded, they're able to go out to the market and they select a home. And once they move in, the SDA provider, who is the kind of tenant and property manager for that residence, is able to start claiming payments by invoicing the government. So I wanted to talk to everyone a little bit about the types of accommodation that we're seeing in SDA and the things that really kind of interest Barwon. I would say broadly, it's multifaceted. It looks and feels like traditional residential, but we would probably term those different accommodation types in 3 different buckets. Firstly is standalone dwelling. So that's detached house, townhouse, or villas. We'd see those typically clustered together in 1 to 3 dwellings plus a carer's unit, or we call an on-site overnight assistance room. The second bucket is a planned community where we'll actually fund, build, or acquire a whole apartment building of anywhere between 4 to 15 apartments, again, plus on-site overnight assistance carers accommodation. And then lastly, we'll consider integrated communities, and that's where we'll buy upwards of 10 residential units that meet the SDA specifications, of course, plus a overnight assistance accommodation room within a much larger residential development. And out of that, you get this salt and peppered kind of nature of the housing, and you get that real integration within that community. Here at Barwon, we're actually looking at all three buckets of accommodation. We tend to be a very participant-led organisation. So participant-led means it's kind of the opposite of speculatively building, where we actually go out and form terrific partnerships with high-quality SDA operators who have fantastic SIL partners, and we'll get onto a couple of those definitions in a minute, to make sure that when we actually are financing or acquiring real estate in this sector, that we're doing it with the end participant in mind about what type of dwelling they want to live in, where they want to live, so that we make sure we have a good product that is well utilised by the cohort deemed to use it. When we think about the amount of funding per participant, when someone goes and applies for a particular type of SDA funding from the NDIA, there's a few different factors which influence that. Firstly is the SDA category I mentioned before, of which there's 4: improved livability, fully accessible, robust and high physical support. And each of those have slightly different design requirements. The second kind of pillar is the building type and how many people will be sharing in that accommodation. So you'll have a different funding package for group homes, a house, attached dwellings, so villa, duplex or townhouse, as well as apartments. And then you've also got some minor adjustment factors. So whether or not the property has an on-site overnight assistance accommodation, whether there's a breakout room, whether the property has fire sprinklers, and lastly, the location factor. And so there's a location factor changing that rate all across Australia to some way account for the land price differential across different areas of Australia. Now, when thinking about developing, owning and operating really high quality, good SDA, it's really important to think about the stakeholders involved. So we've identified 4 key stakeholder groups in this sector. First and foremost is the SDA participant and their network of influencers and advisors around them. So that might be their family, their carers, their support workers, or their plan managers. All of these people need to be engaged and excited about the accommodation you're going to be providing. Secondly, we have the SIL provider or the supported independent living provider, and they're the ones actually providing care into the home. And they will also need to have a plan approval for SIL to be able to provide that care into that residence. Next is actually the specialist disability accommodation provider. Now think of this like a tenant manager and a property manager combined. So they will actually have the direct relationship with the participant, manage health, safety and compliance, repairs and maintenance, and all those kinds of aspects of the dwelling. And then lastly, of course, we have the developer, the owners of those buildings, such as Barwon, whose responsibility is making sure that the home is fit for purpose, safe, and enrolled in the NDIS, so that the participant is able to apply their funding to that home. Now, with all these stakeholders, we have to just talk a little bit about the interplay between them and the contractual arrangements that make this all happen. So firstly, once the SDA participant is funded, they go out and they review the market and they select a dwelling that they would like to live in where there's occupancy available. They engage directly with the SDA provider and they will sign into an RTA or residential tenancy agreement or an SDA service agreement. Once that resident is in the home, they will then be able to submit an invoice to the government and claim on that participant's what's called service booking number. And then the NDIS will pay the SDA provider that monthly amount that they're due. From there, the SDA provider will pay the property owner their portion of the rent. And that relationship is managed by a lease. These are a little bit different than your traditional residential agreements. This is more of a commercial style lease. So these will be in the order of 10 years plus 5 and 10 years options. And broadly, we can see those leases fall into 2 key categories. First is fixed rent. So it's just a fixed rent due each month. And then the second version is a pass-through lease. And under that lease, the SDA provider will simply deduct their management fee and pass through the balance of the rent. So obviously under a pass-through, the property owner takes more of that vacancy risk, and under a fixed rent head lease, the SDA provider manages that vacancy risk. So now we have a bit of context around about the structure of the SDA and how it all comes together and the stakeholders involved. I thought it'd be good to take everyone through a little bit about where we sit currently in terms of the rollout of the scheme and in terms of where participant demand currently is. So where we sit at the moment, beginning of 2022, there's around about 17,000 people that are currently funded with SDA. The NDIA projects and estimates that when the scheme is fully up and running, there will be 28,000 Australians, 28,000 participants who will need SDA. So from where we stand now, there's around about another 11 to 12,000 people that will need to be housed in SDA accommodation. That's growing at about 11% CAGR, and we think that'll mature in about 5 years, so 2027. In terms of the annual rents of SDA, the story is a little bit different. At the moment, we're at 231 million per annum, and when the scheme fully matures, we'll be at 700 million a year in SDA rents paid to the market. So that's going to grow from here at around about 25% compounded annual growth. And the reason for that is, well, firstly, we've got more people entering the scheme. But secondly, we see that there'll be more people transitioning out of older aged legacy stock called existing or legacy under the NDIS, which is funded at a much lower level. And so we expect some of those people to transition into new SDA, which is funded at a much higher level. And then if we think about where we are in terms of the dwelling supply at the moment, we identify that now there's around about 2,462 homes already new built in the SDA scheme. So those are properties built since 2016, 2017. Currently in the pipeline, we've got around about another 2,000. But to get where we need to be in 2027 is for those 28,000 places, we're going to need another 13,000 places or beds across Australia. And so we're talking around about 4,750 new build properties required over the next 5 years to house those 28,000 participants. And if we just think about capital investment to get through this future unidentified pipeline at the moment, we're looking at about 5 to 6 billion of future pipeline that we need to fund, and the private market needs to come and provide capital for. And there's also a universe now of investable assets of around about 2.5 to 3 billion. And so if we just take a kind of a think back or step back and just look, where do we think that demand supply is going to play out across Australia? What we've done is we've taken the latest data, which was produced by the NDIA each quarter, and the latest quarter being the end of December. We've had a little bit of a look at where we think there might be undersupply or oversupply across Australia. It's fair to say that a significant amount of building to date has occurred on the east coast of Australia, and there's been a lot of supply come on in southeast Queensland. And so what we're actually seeing in Queensland at the moment is a total possible aggregate oversupply, particularly for high physical support category participants, which makes it more and more important for looking at those particular properties that you're looking to acquire, making sure that it's really in the top 10 to 20% of desirable and aspirational SDA properties, so that you minimize the possibility of any vacancy risk. But if we look across the rest of Australia, there's actually a severe undersupply of accommodation, most notably in New South Wales and Victoria. Partly, that SDA accommodation has been held back by the high land prices and the types of return not really stacking up. But we believe that'll moderate over time as more entrants, a review of funding, and change of the land supply dynamics comes into place. So, New South Wales undersupplied by about 3,000, ACT 100, Victoria might be another 4,000, Tasmania 300, South Australia about 1,400 places, and Western Australia, where Barwon is building 8 properties, underserviced by about 1,000 new places. So I hope that's given everyone a little bit of context of where we are at the moment in SDA and kind of a little bit of an insight into where the sector is heading. We're going to jump into the Q&A in a second. So I'd like everyone to just have a bit of a think around their questions and what they might like to put to the expert, fantastic panel we've got on today. But in the meantime, we're just going to jump through to a quick virtual tour of one of these SDA properties. So you can have a bit of a look and feel about what these actually look like. So as you've got here, we've got the living room of the ESQ project, which is actually an Access Accom property, which Helen Woods can speak to later in this call. And we're just going to do a quick fly through of the property. So this is out in Penrith in Sydney. It's a 1-bedroom SDA property. As you can see, there is some modifications to the level of appliances. You've got a movable kitchen bench. You've got pull-down cupboards and pull-out cupboards as well. And all the purpose of these design requirements and specifications is to help someone in a wheelchair have better accessibility and independence in really taking care of themselves within the home. We've got enlarged balconies with 0-step threshold through the property. We've got access direct to large bathrooms with wider windows. We've got an ability to push back the shower curtain. We've got a sink there which you can fit a wheelchair under. And all of these aspects in this spec is brought together to really, as I said, deliver a fantastic living experience for someone with a disability. So we're now going to jump over to the Q&A with our panel. So as Tom mentioned earlier, we've got Laila Burnet, the National Director of Health, Aged Care and Seniors Living for M3 Property, as a fantastic macro perspective of the whole sector. We've got James Brennan, a partner from Real Estate Advisory Services of EY, who has done a lot of work with government in some of the earlier big projects and continues to have a running dialogue with the NDIA and other major groups investing in the space. And we've got Helen Woods, who's a non-executive director of SDA Alliance, which is the peak organisation, and the director of operations for Access Accommodation, which is an SDA provider. So she has a fantastic lived experience of running these. So I'm just going to ask each of them to just give a little bit of a rundown of their involvement in the space to date. Laila, would you be able to maybe kick us off with a little bit of intro of your work in the space to date?
Yes, so as Josh said, I'm the National Director of the Health and Aged Care team at M3 Property. So SDA, we basically value these properties all around Australia. So we turn what we see as the funding into an actual value. We're quite in a privileged position because we do get to see a whole range of projects and a whole range of organisations. But essentially, we do the feasibilities, we do the funding, and we help groups like Barwon and other institutions look at their investment into this sector. That in a nutshell. Wonderful.
Thank you for the intro. James, would you be able to give a bit of an intro about kind of your work and involvement in the sector to date and EY's participation in the space?
Yeah, sure, Joss, and good morning, everybody. So I'm a partner in the real estate team at EY, and I've been involved in the SDA sector for about 5 years now. I first got involved as financial advisor to the New South Wales government in respect of the Hunter Residences transaction, which was the sale of 70 parcels of land, which was subsequently developed into high physical support dwellings to Home for Life Consortium. And since then, I've just been providing a range of advice, primarily in the strategic end of the spectrum, also financial modelling, but also assisting sort of large institutional capital in getting a foothold in the sector. So at EY, we're continually monitoring the data that comes out of NDIA, which is getting progressively better, and I'm looking forward to sharing some of those insights today.
Wonderful. Thank you very much, James. And Helen, you've got a fantastic position with the SDA Alliance, and I believe you guys were a founding member. You've also got the lived experience of running some of these SDAs. Perhaps you could give us a bit of background around your involvement in the SDA Alliance, what they're seeking to do, and also your role as an SDA operator.
Thanks, Josh, and good morning, everybody. Yeah, so I've got a background in developing community housing and housing for seniors, all of which is very relevant to the reasonably nascent sector of SDA. I'm also, as Josh mentioned, on the board of the SDA Alliance. So my day job is to find the tenants and look after the tenants for Access Accom, sourcing tenants and tenancy management. With the Alliance, what we're doing is acting as a single voice for providers and investors in SDA to work collaboratively with government and other stakeholders to make the sector more sustainable, more viable, more efficient. So we represent the, as I say, the providers and the investors, and we have membership, which is also has a very high bar to become a member. There's a lot of scrutiny and vetting to make sure that our members are instituting best practice in managing SDA. And I can probably summarize that by saying one thing is that members put the participant at the center of their decision making. So that's first and foremost the sort of golden rule of working in SDA, that if you don't put the participant first and make your decisions around that, then it's not going to work for anybody.
Fantastic. Thank you, everyone. And Helen, that's probably got a good segue into a question I've got here. So starting off with the participant, what kind of real life stories are you seeing the impact of SDA is having on people's lives? Maybe you can talk to one or two residents that you're working with.
Certainly. It has an amazing impact, not only on the lives of the residents, but as you can imagine, on the lives of their families and carers as well. You know, we have a lot of people who come to us having been looked after by their elderly parents all their lives, and they're only ever getting their independence in their 40s and 50s because their parents are now in their 80s and 90s, and they themselves have got to go into care or you know, retirement living or something like that. They just can't physically look after their kids anymore. So just to give you a couple of examples, we had one chap who was living in a caravan in the garden of his mother's property. He is in a wheelchair, so he actually had to crawl into his caravan and live there because his mother lived in the house and that wasn't accessible. So his transformation has been incredible. You know, all his personal hygiene requirements are now met. It's very hard to keep things clean and tidy when you're living in a tiny little cupboard. So he's had a very positive experience. And for the family, then the mother was able to sell the property and go into aged care, and because she couldn't look after him, obviously, he was in his 50s. That's one story. And another story would be of a young person who has been able to move into her own home. She's an amazing young woman who is non-verbal, but she has her own blog, and her ambition is to be a motivational speaker. This is a non-verbal person who translates her words by typing with her nose and translating that into speech. So she advocates for other disabled people, and she has a wonderful blog which shows that she's been scuba diving and skiing and doing all these things. She's got severe cerebral palsy, just to promote the fact that, you know, you can do so much more if you have the opportunity and the ability to have these experiences that a lot of people with disabilities would never even imagine they could do.
Yeah, that's fantastic stories, Helen. We've got a question here. How do you normally source and find potential tenants? And do you get kind of formal pre-commitments, or how do you go about engaging them in the process before something is fully built?
So I think that's a $64 million question, isn't it? How do we source the tenants? And that's a really important question, because if you don't get that right at the beginning, then again, you know, you're doomed to failure. You have to have the right people in the right places. And that's, you know, goes for their disability, or it may be, you know, if you're in a shared situation, you know, you have to match gender and interests and temperament and all kinds of things. So Networking is really important. We have for example, we have an extensive network of connections with allied health professionals, with support coordinators, with some of the major hospitals that deal with spinal injuries, for example. So through those networks, obviously we advertise on the general platforms, the Housing Hub and Go Nest, and by word of mouth, by our own website. So, but it's very important that you just don't take anybody into any situation. For an apartment living, it's important that the resident is able to live with other people, that they're not going to disturb their neighbours or anything like that, that they're able to have the independence to call for help when it's needed. So you get the kind of idea that it's horses for courses. Sorry, I've forgotten the second part of your question, George.
I think you've probably answered it. It was just, were there any pre-commitments that I can probably speak to?
Well, pre-commitments, I think, mainly come in if you're replacing existing properties, and if you're in the house development sphere rather than apartments, I think that's much more important. It's because the matching for people in shared houses is, quite involved and complex. And so if you've already got some people that have lived together before and you know that they're compatible, then that helps enormously, because that's the main challenge for us all in providing disability accommodation, is really providing a home-like environment. So you have to have people who can live together harmoniously, or it's just one management challenge after another.
Yeah, thank you for that, Helen. Like adding to that, Helen's one fantastic SDA provider and an example of the type of partners that you want to have in the space. From an investor's perspective like Barwon, we're out there constantly in the market filtering and making sure we've got the very best SDA providers out there who really understand the markets within which they operate. And that helps us make sure that we've got the right people on board to make sure there's tenants in those properties. And more importantly, that we're actually investing in the right properties where participants want to live. Because at the end of the day, you've got to have the absolute best accommodation, best design, and in the best place to make sure that you manage that sourcing and vacancy risk for tenants. Great. Laila, we've got one here. It's fair to say there's, you've had a kind of full view of the sector over the last couple of years, and the dynamics are changing, and particularly with larger institutional groups like Barwon coming in. Maybe you can talk a little bit about how the sector dynamics are changing as larger groups like ourselves come into the space.
Yeah, so the industry is still very much in its infancy. It's early days still, but having the institutionals come in has been very good. So the more sophisticated they become, and groups like yourselves become a lot more educated and a lot more sophisticated in your investment, you're actually driving the quality of that investment. So as Helen mentioned, if you're developing properties that have the participant in mind, they create actually a better investment. And they're the types of investments that we're seeing groups like yourselves want to be in, not just standard housing or just quick projects, ones that are actually purpose-built, well-designed, and have stable occupancy. It does depend on the location and all the other factors that go into these sellings, but having these investment groups come in has really strengthened the market, and it shows that it has certainly has a future, and that it's not just going to be a cottage industry. This is a sector that will have certainly be a lot certainly robust moving into the future.
Yeah, wonderful. Yeah, no, that does. We're actually getting a couple of questions through here around kind of valuations and kind of how you look at things. So I think the first one is kind of what's your general approach for valuation methodology for SDA properties? And is there a difference to those that are built to the higher standard versus, some of the stuff that we've seen out there in the sector that, isn't really where we want to be? And we've got a second question which ties into the valuation mix around about many developers and providers as SDA are building to high physical support. And for those on the line, that's probably the smallest cohort of SDA is high physical support, but of course it gets the highest level of funding. But are expecting there will be a mix of IL, FA and HBS participants, so the range of different occupants occupying those HBS properties. how does this balanced tenant mix factor into your valuation? So I think it's probably just more of a valuation approach question, and then how you're considering that with the amount of high physical support supply that has come online, and how you're looking at tenant mix going forward and the assumptions around that.
Yep, very comprehensive. So when it comes to valuing, our job is to value the cash flow. So we follow the money. So if you're the SDA provider and we're doing it for the owner, then we actually do it on a DCF basis for a 20-year cash flow. And we take into account not necessarily what's being built. You talked about, majority being built to high physical support, which is actually what we're seeing, but knowing that the majority of people going into them are not high physical support. They have up until to date been quite a high take-up of high physical support, but that's because we've got such an undersupply. But moving forward, we're going to see a lot less people, like I said, with that high physical support. So we've got to come to a balance as a valuer and try and understand what the supply and demand is in that particular location. So working with groups like Helen's group and certainly others that are out there, we've got to be constantly monitoring the market, talking to them, understanding what demand there is, because there are people out there, as you said, there's about 16,500 participants out there with SDA funding, of which the majority of them haven't yet moved, they're in legacy stock. So there is some level of understanding of what that mix would be, but we don't have any benchmarks. So it is a case-by-case basis. If there's a lease in place, like a head lease, depending on the structure of that lease, we see a lot of creative leases come through. They're really just a fund through or a flow through of funds, and so we still treat them on a DCF basis. But if they're a true head lease, where the tenant is, it's a 10-year lease, they're taking on the vacancy risk, basically a triple net lease, then we'll value it like an investment on a cap approach basis. And we're seeing that as very popular in the market, and certainly from an institutional investment perspective, it is it's easy, a lot easier investment to understand, to make for investors. So we'll see a lot more of those deals come through the market.
Great, thank you, Laila. And for those out there, when Laila's referring to tenant in that respect, she's talking about the SDA provider, not the participant who is the subtenant there. I get confused about it all the time. So just for anyone who's new to the sector, we just like to clarify that. And in that way, a head lease is like a traditional commercial lease, being 10 years. And if it's a fixed rent, then they're taking on the vacancy risk. But you had some really good comments there around demand and supply dynamics. I'd like to chuck over to James. We heard in your kind of bio entry there that EY is doing a lot of work on tracking the demand. What kind of, and you've spoke to the demand data, and the supply data is getting a lot better from the NDIA. How are you tracking demand, and what kind of key trends are you starting to see emerge?
Yeah, so I think first and foremost, we track the NDIA data at a national level, but we also get quite granular at sort of SA1, SA2 and SA3 level, because a lot of our clients that we're advising on have got specific developments in particular locations. One thing that we're monitoring closely, and Laila, you have referred to, and I think you did, Helen, is the uptick in pipeline for high physical support. We're seeing we're quite concerned about the extent to which that pipeline is made up of high physical support, but it's the minority of participants that demand that sort of housing. So that pipeline may or may not crystallise, but it's something that we're closely monitoring, and we're seeing a shortfall in robust accommodation. So, which presents an opportunity for investors in this market to fill that void, because the returns are still there, and there's certainly the demand there for that sort of product.
Fantastic.
Can I just make a point there about the potential oversupply of high physical support dwellings? A lot of people will develop for high physical support and robust and fully accessible and enroll the properties so that they're developed to the highest possible standards, so that you've got the biggest potential pool of clients to draw from. And as long as your metrics work with a mix, then that's clearly a risk mitigation strategy. So I think some of the statistics around oversupply of HPS is because of that, because of people taking that risk management approach.
I couldn't agree with you more, Helen, and I was actually going to follow up with James on a question. Would it be fair to say that, as a sector, to the point Helen made, is when we're considering developing those design categories, we often want to build to a HPS standard, knowing that we can accept people from a range of categories in that HPS designed building, and so, or apartment or home. Do you think some of the data maybe isn't really capturing that aspect of the sector?
Absolutely, and it is an important clarification, because to Helen's point, you can still, put a participant that's eligible for robust in a high physical support unit. So it's a really valid point, and we're seeing a lot of investors that are designing to that sort of upper end of the spectrum to give flexibility. We're also seeing that the difference in cost to build robust versus high physical support has come down relative to what we were seeing 5 or 6 years ago, because there's much more, there's smarter design input into the dwellings.
Yeah, fantastic. And, as the sector progresses, we're going to get more granular and understand the data a bit better, but it's a very worthwhile clarification. We've got a question coming through. Oh, do you want to jump in?
I was going to add something else about the high physical support being built. Is we're actually working with a lot of groups that have deteriorating condition, or their participants. So they're building to high physical support. They're going in at a lower level, but it allows them to stay in the same dwelling, because it's been built to a higher standard when they need it down the track. So it is certainly worthwhile.
That's a fantastic point, Laila, because if you don't have the accommodation that can support someone at that higher level of category, you will lose that tenant. So it's a really, really important point of clarification. James, Laila spoke earlier around, some of that existing age stock, and you have that experience in the Hunter Residences projects. What are you seeing from a similar perspective of large SDA kind of projects of upgrading and moving and changing people into new build SDA? Is that still happening, or what are you seeing across that space?
Absolutely, and I think that I see that as a big opportunity for institutional capital. So one of the restrictions to date has been that it's a heavily segmented market. There's upwards of 300 odd registered SDA providers across Australia, and one of the challenges that institutional capital has had is in relation to getting scale relatively quickly. One thing that's not sort of specific in the data is the extent to which New South Wales, Victoria, all of the state governments still control legacy stock on their balance sheet, and that's all accounted for in the total dwelling numbers. So it probably comes as no surprise that the vast majority of legacy and basic is generally government-owned product. I see that as a big opportunity for institutional capital to come and sort of provide a solution to government who controls the land, but the stock's not fit for purpose and isn't necessarily up to scratch, and governments don't necessarily have the capital to deploy to reinvest.
Yeah, fantastic. Oh, did you have more?
Well, I was just going to say, so, and that's the level of granularity in the data isn't quite there in relation to that. But I know that Victoria, as an example, 2 years ago was registered as having in-kind dwellings, i.e. that it wasn't yet registered. They've subsequently registered their dwellings, so they don't come up in the in-kind data set. But 2 years ago, when they were registered as in-kind, there was something like 850 dwellings in the Victorian market that's still owned by the state.
Yeah, wow.
So that in itself, and I think New South Wales is probably around a similar number.
Yeah, wow. So there's a large opportunity there for institutions to help government upgrade their older stock and deliver a better quality product for participants. It's really, really interesting. Laila, we've got another question here around kind of valuation and cap rates. It must be from one of our healthcare investors. We've seen healthcare improve in relation to its understanding of the mechanics and risk of the market kind of over the last 5 to 10 years. In SDA, it seems like we're working through that at the moment. And as institutional cap rates come in, or institutional groups come in, cap rates will change. Where are you seeing cap rates at the moment for different properties? And do you expect these to sharpen over time?
Yep, very good question. They are fairly soft. So we're still seeing cap rates around that 7 to 8.5%, depending on the lease structure and where the location of the property is. We expect that will sharpen, but it is still very early days. So yes, we're seeing a lot of the institutional investors in the space. They want to be in the space, they want to invest. So it is creating competition, which generally then does have caused cap rates to compress. But the majority of groups like yourselves are not acting rash. You're certainly doing your due diligence. And because it's such early days and the risks are still there, you know, and the market is still being established as far as benchmarks and understanding how it's going to work in the future and what happens at the end of a 20-year funding and so forth, that those cap rates, we probably won't, I don't expect to see them really decrease in the short term, but certainly in the next few years, we'll see a compression.
Fantastic. Thank you for that. Helen, we've just got a question here around how you select and also work with your SIL partners or other people who are providing care into the residents to make sure that you're managing any kind of reputational risk. And how does the SDA Alliance consider kind of making sure that the industry is operating to the best standards possible?
I'll take the first part of that first. In terms of selection of SIL providers and managing that relationship, obviously you have to do your due diligence, and we work with established providers whose reputation we are comfortable with being associated with. It's very important. Our brand and the relationship is important. We consider it crucial. The way we manage is by always having a constant relationship all the way through. So you'll get feedback from your tenants. If you're in touch with your tenants, you'll know how your SIL provider is delivering, meeting expectations. So we would be having regular, probably quarterly meetings with the senior management of the SIL provider and regular weekly meetings with the on-site team. So it's a very close relationship. I think the question went on to ask about, how you change a SIL provider if they're not delivering the service appropriately. And the way our documentation is written is that that's a tenant decision, and it depends on a majority, 2/3 majority vote. So basically the tenants can get together and vote a SIL provider out and select a new one. So it's a tenant-led decision-making process. So I think the second part of the question was, how does the Alliance...
How's the Alliance and its members coming together to create a kind of level of best practice? And we've just got to finish up in a minute, so maybe we don't want to cut you short, but just give a little bit of rundown of what the Alliance is doing.
The Alliance, as I said, has a high bar for membership. So the Alliance advocates very strongly for the separation of care and property relationships. So not a big fan of SIL homes where one organisation is still in charge of the accommodation and the care provision. This also extends to support coordination services. So the Alliance is very keen on seeing all those services being provided by independent organisations. So in best practice in SIL, the Alliance is there to focus on SDA providers and the provision of accommodation, not on disability support as such. So, really we focus on good practice in accommodation, which is to make it separate from the care provision.
Yeah, fantastic. And look, with my short experience with the SDA Alliance and the members within that, they're really working together to create a best practice kind of level for the industry, which is fantastic.
So we share experience, we share research, and that leads to best practice and the evidence for our advocacy with government and other stakeholders.
Yeah, fantastic, Helen. Guys, that's been a fantastic insights that you've provided through Q&A. So thank you very much for your time. We've only got a few minutes here, so I'm just going to throw to Tom Patrick to round out today's call. I wanted to thank you very much for your involvement in the Q&A. There's been some fantastic questions coming through, and you've provided some wonderful insights to everyone on the call. So thank you.
Indeed, and thank you, Joss, and thank you everyone in the participants today. We've had a raft of questions. I've been furiously typing responses to as many of those as I could. Probably got through about a third of them. So we'll try and look back on some of those if they remain unanswered. But thank you for those questions. Thank you, Joss. Thank you again to our panelists, Helen, Laila and James. Some particularly interesting insights there today. Very much appreciated. I think that today's session, it's quite nicely highlighted some of the reasons that Barwon's excited to be investing in this sector. We've covered a lot of ground today, and the sector is not without its complexity. But I think in essence, if I could summarise, it's specialised residential accommodation managed through long-term leases with tenants. And I think the high-level characteristics we particularly like are the government-backed, inflation-linked income profiles that can be generated. We've got a market that really clearly demonstrates strong demand and an obvious undersupply in certain micro locations. And it is an area where investors can be making, we think, an obvious social impact. I think if you were to look around Australia at the Australian economy at the moment, it is difficult to find sensibly priced real asset opportunities that offer some of those characteristics. So those are the main reasons that we're excited. And I think to which end, the Barwon Disability Accommodation Fund will be continuing on its journey to become a leader in the sector in much the same vein as we have done in our other healthcare funds. To date, we've raised around about $50 million of capital, which has all but been deployed over the last 6 months, and we'll be seeking to build out a diversified portfolio of assets for the fund over the next 24 to 36 months. So the fund will be open for capital raising over the next few weeks. Joss has been working very hard to identify a good-looking pipeline of assets that we think can sensibly deliver on the fund's stated return objectives, those being a total return in the range of sort of 8 to 9% after fee IRR and an after fee income yield of 6+% and growing. So thank you all again today for joining us. Please feel free to reach out to anyone at the team at Barwon if you'd like any further information on the Disability Accommodation Fund at Barwon, or indeed the disability accommodation sector in general. We'll be in Melbourne and Brisbane in the coming weeks to talk with some of you in more detail, and I look forward to hopefully seeing some of you again soon. Thank you again for today to all of our panelists and everybody who's joined us. We hope you found it very valuable.